The rapidly escalating crisis of food availability around the world has reached emergency proportions.
We estimate that a doubling of food prices over the last 3 years could potentially push 100 million people in low-income countries deeper into poverty.
All what has been done can be destroyed very rapidly by the crisis coming from the increase in food prices.
We've had riots in Haiti that ended in some violence, Egypt, parts of Africa. They're really, scattered around the world, but obviously in developing countries where you have lots of poor consumers, particularly countries that have recently urbanized.
For the first year this year, we saw a decline in worldwide food production, and that's quite striking.
Simply, there is not enough land for the amount of crops that people want to consume, whether it by food or whether it by fuel. And the only way of actually rationing demand, unfortunately, is price.
People are well aware that they're paying more for food, they're paying more for energy, they've got less disposable income, therefore spending less on other goods, and it's dragging down growth and just really being a constraint on consumer sentiment across the board.
The more poor the country, the bigger the problem is, because it really does impact on disposable income for a lot of poor people. So clearly it's a problem for countries like India and Indonesia as well. From a macro perspective, of course, those countries which heavily subsidise food prices, they're going to suffer as well, because a lot of people will bring into question the fiscal discipline of these countries too, and of course it probably mean higher rates, interest rates, than otherwise would have been the case, so it'd probably be a dampening effect upon demand there as well.
Usually the commodity prices transfer anywhere from as low as 5 or 10% pass through to as high as 35 or 40%. It really depends on how processed the item is at retail, but we definitely have seen accelerated retail food prices over the last year or so.
In some parts of the world, the developed world, what will happen is that the slowdown in economies will be sufficient to offset the rising food prices. But in a couple of places, things may become more complicated. I don't think we're going to be heading for significant stagflation anywhere, but I do think that the scope for interest rate cuts is limited by these events.
Moving forward, we're expecting rice prices to slow down the appreciation, but still continue to keep moving higher.
I think we'll see some stabilizing for soybeans and wheat. We've seen in the prospective plantings reports that there will be more acres planted for those two. Of course, there has to be a trade-off there, and corn will be down a little bit this upcoming year in terms of the current plans, and that means I don't see any time soon corn prices falling. Wheat, you may see some relief over the next few months.
I think the thing to watch at the moment, though, is animal proteins. And by that, I'm talking about milk, I'm talking about live hogs, I'm talking about cattle. Particularly in the case of the latter two, they're actually trading below their cost of production, because as the price of grains have gone up, and you have to feed grains to animals to make them grow, their production has become increasingly uneconomic. That is not sustainable.
Sugar is very interesting because it's had a hard correction in the last 12 to 18 months, and I suspect with Brazil burning more sugar to produce ethanol, sugar prices are going to go a lot higher in the future as well.
You have to position yourself in people who can increase the yield, who can help farmers to produce better crops, and that's where you will find value. You also have to position yourself with people who own lands, because agricultural land has almost doubled during the last 2 years worldwide, but it's going to continue. We're still convinced that good earth will cost more in the future, and this is an undervalued asset. It's a really lagging asset class, agricultural land, if you look on during the last 50 years. So that's where I would buy listed companies who owns agricultural land worldwide. We also want to be positioned with fertilizers companies, and also with seeds and even other mechanics like tractors, and only 20% of the farmers in China are mechanized, so there's still a huge room to grow there.
We expect in the medium run, that means the next 2-3 years, to the food prices to remain high, and that is because some of the factors, like for example biofuels, are here to stay, and it will take some time for the supply sides to adjust to that.
Given the weakening economy here in the U.S. and elsewhere, investors are looking for other opportunities, and commodities are one of them, and that certainly adds fuel to the fire in terms of the recent surges we've seen in commodity prices.
The agriculture system is quite capable of adjusting and adapting to these sort of demands.
This bull market's got a long way to run. We have severe supply and demand imbalances all across the commodities complex.
Unfortunately, I think we are going to have to get used to high prices. This is not a short-term phenomenon we're seeing at the moment. Agricultural prices are, I think, about 2 years into at least a 5-year uptrend. We've still got to see substantially higher.
Grazie Luciano,